Well, good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 2nd of May, 2024. What a wild time in these markets. And I mean wild time. If you feel like you're getting whipsawed, you probably are. And that's not uncommon when you get a week full of very major reports and you're fighting not only what's going on in the reports, but you're fighting what's going on in earnings and stocks. That's impacting the stock indices. Then you're fighting inflation. You're fighting what's going on in world war with Israel and Hamas, which I understand Hamas is running back to Egypt tomorrow to have more discussions. They are doing their darn best there. And the Saudis have entered the foray saying that they will open negotiations with Israel, recognizing Israel for diplomatic relations, if Israel will commit to a Palestinian state. So pressures are coming on to this in every single way you can imagine, which if Netanyahu gives in, he probably loses his job. So is he going to be for himself? Is he going to be for Israel? It's wild what's there. Next week, remember, there'll be the vote in the House to get rid of Mike Johnson by Ms. Green. I doubt that it'll pass, but it's another event that we have to deal with. And, you know, nobody's talking about all the monies we need in America, but that'll be coming very shortly. All right. So as you look at all this, you've got to understand, you get a big report in the morning. My way of handling these is just what I've got you. Don't do too much. Wait for the report to come out. Give the market 30 minutes, maybe an hour to let the dust settle, and then approach the market. And I know you'll be dying to jump into the foray right away. That can be very dangerous. I've seen this. You get the non-farm payroll data at 7:30. The S&P Global Group comes out with their final April service sector number, and that's going to be the final, and the ISM comes out with its service sector indices for April at 9 o'clock. So we're going to get a lot of services information that's cleaned up. But the big report's going to be the jobs. The market is, as you know, is looking for about 240,000 jobs with unemployment staying at 3.8%. You got to look at the labor costs too. My advice to traders is you stand back, let the algorithms handle the report, and then afterwards you can come in after the dust settles. I've seen crazy things. Today, the USDA came out before cattle opened and announced that they had done a test. They had gone to 30 retail stores in states where there was some bird flu in the dairy cattle. They tested everything, and they gave all the meat tests a clear sailing. Market opened 400 higher. Had I known that report was coming out, it would have been nice. But you don't know when some of these are going to be released. These aren't scheduled. This was done to put everybody at ease. Now we know the milk, if it's pasteurized, is fine, and we know our cattle's fine. That doesn't mean others will believe what the USDA is saying, but those are what the report showed. So tomorrow, I can already tell you, a guy like me stands back from the market and says, let the dust settle, and then I approach the market right after that. You'll see me in the morning update, remember, when I review all that with you, and that'll be right after 8 o'clock in the morning, so I'll be able to give you my take on it. When you look at the weekly close of the S&P, you know where the battleground is. I pointed it out clearly. The market has come back to the 18-day average. If it were to collapse, you'd have to get under the low right over here on a closing basis, and that would be specifically right here. You'd have to be underneath 50.0375, and that would put this market into a downtrend if that occurred. I'm not saying it will. If it's going to hold support, it's got to hold the 50, 62.5 zone, in my opinion. When we come to the chart, you've done the stepping ladder to the downside, and now the market's ready to tell us another leg down, or is the market going to be able to clear all this and try and move to the upside? Right now, it's a churn. And if you feel that you're just watching the market churn away, you're not alone. So are the pros. You can see what it's done overall. It's lower highs, lower lows. we're in a pullback in the market. I didn't use the word correction. To me, a correction's a 10% break. You haven't had a recent 10% break. The battleground is easy to see, and I've pointed out to you all week that I thought you were fighting between the 100-day average and the 18. Now, if the market can clear 51, 54 and a quarter and stay over the 18-day average on the close, the market will throw out, at least in the interim, that we have changed the pattern to a higher low and a higher high. If the market gets underneath the 100-day average, where might it go? Into the lower Bollinger Band. It's not an oversold market. It's not overbought. It's just sitting here, and it's a difficult call. When you come to the NASDAQ, yesterday I pointed out I thought the fight would be at the 18-day average and the 100. Now it's all hands off of the market. Why? The report can send you either way. Again, like the other market, if you can clear here 79.49, you re-enter the bullish foray. You're not oversold. If you take out this low, right through here, the 17,386, you open the door for 17,123. Apple looked, how do I say this? People are buying into the AI concept for Apple. When you really look at everything, I don't think it looked great at all. I disagree with what the market reacted, and it is up about 5-6%. But why is it up? Because they're doing $110 billion buyback of the stock. They've been doing about $20 billion. So if you want to get it up, you take it up. That affects all these markets. But if you're to tell me, hey, that their product looks good, no, it doesn't. We're going to see what happens on May 7th. If you look at the Chinese sales, they're not good. And if you look at the overall phone sales, they aren't. But they have the potential, come September, to tie AE into a new phone in some way to get people to jump. But it can't be just, here's your basic little toy. Nah, it's got to be more than that. Siri can be tied to that and get it very exciting. You have a higher highs, lower lows. I don't see anything to do there. And in the Russell, as I said, it's been holding. It's over the 18-day average today, and it's caught. It keeps hitting this. Now, this is not the first time. This is the battle. The 100-day average to the 18. It tries to stay under. It pops back up. This has been the pattern all week long. Hands off. After tomorrow, maybe we get an idea of what to do. This rally, I'm the least surprised guy in America that we had a rally here. You lost the bearish reading. You should have gone back to at least the 18-day average. Same here. Maybe the upper Bollinger Bands. They could be hit. Tomorrow's jobs report will be the key. And whipsaws in the dollar index back and forth is the dollar. It's a little surprising to me because we know that the other major currencies want to cut interest rates. And the question is, the dollar, even if this report is bearish, doesn't put the Fed probably into anything but maybe a September cut. I have seen people saying, and I saw it today, 4 cuts, major banks, 4 cuts coming right now. They could be right. You'd have to see the jobs market collapse. Did you see that in the jobless reports today? I didn't see that. So I don't know where they're coming from with that. When we look at the eurocurrency, is the market going to get back over right now the 107.60 level and say, this downtrend's over? I don't think it has any upside capability. I think at 107.87, it's got a lot of resistance. And I think if it can't take out this and it gets under these lows, you open the door a lot lower. You're overbought as can be in the market. In the British pound, you're overbought as can be. Coming up, I can't wait to wake up in the morning and read about how the elections went. There's a lot of mayors and other people being up for election, and it gives an idea how the current prime minister is going to do if he had to call an election later in the fall or winter. This is going to give us an idea as how that works. The market right now up on the day and sitting here, it's not telling me a story with it. Resistance, again, 200-day average, support 18 and overbought. Bitcoin came down as we thought it would. Remember, I prepped you when you had the halving event. I said, don't get suckered in. The market normally pulls back, but the real rally begins about 4 months afterwards. So there's time from here. Let's see what the market does. Certainly not doing anything, though, in the friendly side. And the differential between Brent and WTI, well, it's hard to guess if this means a lot when we don't know what's happening in the war. Are the Houthis going to keep going on and attacking everything? Or if there's a truce of some type, do they adhere to it and shipping can stay open for 6 weeks and everybody routes their ships right through the canal? I don't know. Nobody does. We got to wait and see how this is going to come out. In the crude, meanwhile, you have really fallen back, and I think you can count on the fact that come June, you will hear OPEC say for the time being they're going to hold with their current production cuts. There's going to be arguments from the United Arab Emirates as they've just completed a big, expensive project where they can get out another 200,000 barrels a day very easy. Will they demand, as they did before, that they get a bigger allocation? I don't know. When they did that and they took it away from some African countries, Angola pulled out of OPEC. So got to keep your eye on all that. Higher high, lower low, big support down here into the 77.82, 77.57 Bollinger Band. But markets leaked to the downside. Gasoline, same thing. President Biden's got to be jumping. We don't have higher prices at this point, and he's lucky, okay? Now, will he buy more oil if oil keeps dropping for the strategic reserve? That'll be the other thing that's going to be on the equation. And look at the sideways action in that gas. It's going to come out of here in a big manner. So this is a market that I wouldn't be surprised that maybe not for the June, a little further out, people are putting on some straddles saying, I don't know which way it'll go, but I'll buy a put and a call, and let's see if we get something big that happens out of there. Wouldn't surprise me at all. But that and so much more is discussed in your free offer section. I'm just showing you the bottom section of this, and underneath here, after you click on one of the blue boxes, it puts it into a cart. Below you fill out your name, your email. We send you what you want. You might want to take a look on this one at the Moore Research Center. They are known for their going back in time. They look back 15 years. They'll give you charts of 30 years of what the market has done. It could be day by day, week by week, month by month, what has taken place on a seasonal basis. And I've used them for at least 30 years, as long as they're in business. I find them the premier service. And I have tried all of them that were out there, and they are it. I've tried the exchanges products, theirs. I think they have the best one. They do spreads, they do the futures, they do cash. You can go month by month. What has it done? The probabilities. Some of them are 100% that they've worked 15 years in a row. When they don't work more than 13 out of 15, they drop them. Not interested in it. So you get an idea. Past history is not a predictor of the future. However, it does give you in some markets what the seasonality does. Think of grains when they grow. Think of treasury needs when they occur. There's so many on here that you watch it over and over. What about the Santa Claus rally? It's all there. So if you'd like to get some of this, just go to our website, iraepstein.com, free offers, or move your cursor to the top up here and away you go. I'm Ira. You have a good day.